What changes when you stop asking, what deal should I buy, and start asking, what am I building toward? Before you buy your next investment property, do you actually know what you want real estate to do for your life? I'm Stevie Riffenbarrick. I'm a realtor here in Chattanooga, and I focus on the strategy side of real estate, especially where financial decisions really matter. One of the biggest mistakes I see investors make is skipping the planning phase and jumping straight into buying. That's why I want to walk you through how I help investors create a real estate investment plan that supports their life, not just their portfolio. First, start with your goals. Most people assume the first step in investing is finding a deal. That's usually where the focus goes, but that's not actually where investing starts. Most investors don't need more properties, they need more clarity. The first step is a conversation. You need to know what's important to you right now. What's your 10-year plan look like? And whether real estate is meant to support retirement, replace income, or create flexibility. If you don't have those answers yet, that's completely okay. That's why I offer no pressure consultations to help investors work through those questions without rushing decisions. We also talk about how involved you want to be over time. Some investors want to be hands-on. Others want real estate to run quietly in the background. The key distinction is this: there is no universal right investment strategy. There is only the strategy that fits your life. In short, the plan should be built around your life, not the other way around. Once the goals are clear, the next step is the numbers. Second, work backwards from the outcome. This is where I help investors shift their thinking. What really matters isn't how many properties you own, it's what those properties produce. Instead of asking how many properties do I want, we ask how much income do I want real estate to generate over time. From there, we can break it down into monthly income goals, annual cash flow targets, what one property realistically produces, and how many properties it actually takes to get there. When you work backwards like this, investing becomes calmer. You stop chasing deals and start making intentional decisions. This is where strategy starts to reduce stress long before the purchase ever happens. Third, strategy, risk tolerance, and property type. Not every investor should be flipping houses. Not every investor should be holding long-term rentals. And not every investor should be using the same strategy they saw online. That's because not every investor has the same lifestyle, timeline, or risk tolerance. This is where we talk through how much risk feels acceptable, how involved you want to be, long-term rentals versus flips, and whether real estate is meant to support retirement or active income. Then we look at the math. How many properties over time? How many per year? What equity growth realistically looks like, and whether strategies like the Burr method make sense for your situation. The bottom line is simple. Strategy should reduce stress, not add to it. When you have clarity, every decision gets easier. Here's what I want you to remember. Start with a plan, not a property. Define your long-term goal before chasing deals. Work backward from cash flow and retirement numbers, and match your strategy to your risk tolerance and lifestyle. Let clarity guide every investment decision. Clarity beats chaos. If you're an investor or even just thinking about getting started, subscribe for more strategy-first real estate guidance. And if a purchase or sell is on your radar, talk to me early. One conversation can create a whole lot of clarity. Drop a comment and tell me what you're hoping real estate will do for you long term. I'd love to know.